Is the stock market overvalued? A big question. There is a major question surrounding the Indian stock market. Has it become overvalued? While some experts are issuing warnings, others remain cautious, optimistic. After high valuation, the narrative of the market correction is gaining traction. Investor sentiments is fueled by several factors. If you are confused, this video is for you. Let us understand what's happening in the market. Where did this overvaluation concern come from? Somewhere before, Kotak has come up with their reports saying that the reward risk equation for the Indian equities remains unfavorable despite the recent fall. Shankaran Narain, the CIO of ICICI Prudential AMC, raised concern about the dangerously high valuations in the small and mid cap stocks. He even warned that the 2025 could be one of the most dangerous years for investors since 2008 crisis. Valuation expert Ashwar Damodaran also stated that the Indian stock market is the most expensive equity market globally, trading at 31 times of earning, 3 times revenue, and 20 times EBITDA. According to him, these valuations are not justified. See, these are the graphs stating the valuation. Now, these concerns are not new. See, a report from Kotak Institutional Equities labeled as the markets are overvalued emphasizes that whenever the valuation builds up, the quality investment declines and the risk increases. When valuations are excessively high, corrections is a natural, and there is that is what actually happened after peaking in September 2024. You can see that the Nifty 50 has dropped by more than 12%. The exact figure is 12.92%. The Nifty mid cap 100 has fallen by 20% roughly, and the Nifty small cap has declined significantly. That is, you can see here in the graph. See, the thing is, valuations are not the only factor that's playing for the fall in the market. There are various factors played a role. Rising US Treasury yields led to heavy selling by the foreign institutional investors that you can see here. India's GDP growth. See, India's GDP growth slowed to 5.4% in July, September 2025, falling below the RBI 7% projection. And the corporates earning of the top companies showed the weakest quarter in growth in years. The Tata Group seeks to pursue growth despite uncertainties. Economists revised the growth of their full year growth estimates and flagged inflation and high interest rate as major concerns. Another reason is that a rally in the US dollar promoting the aggressive sellings of the foreign institutional investors. You can see that in January they sold 87,000 crore. In December 2024 it was 16,000 crore. November it was 45,000 crores. October it was 1,14,000 crore. So we can say that there is an aggressive selling of the FIIs. Now let's look at another question. Will the markets recover or fall more? So some experts remain cautiously optimistic. Prashant Jain, who is the founder and the CEO of 3P Investment Manager, believes that the Nifty could deliver moderate to low double-digit returns over the next 2 to 5 years. He observed that during the market correction, underperforming sectors like bank, IT remain stable. See, here you can see that the fall is quite negligible. But while outperforming sectors like consumer, auto staple, utilities, oil and gas were sharp decliners. He suggests that the large cap stocks now have a better value. Uh, while Dheeraj Reli, the MD and CEO of HDFC Securities, agrees that the large cap are better, but due to the improved risk reward ratio, he pointed out that the Nifty's 1 year forward PE is now at a 7% discount as compared to its post 5 year average. Same Nilesh Rana, who is the CEO of Mirai Asset, also emphasizes the large cap and the mid cap stocks remains risky, while the large caps are now appearing reasonably valued. Now, if we see, there are not only negatives in the current market, but if you see the long story of the Indian stock market, you can see that the small caps has fallen more than 76% in 2008 2009. In 2010 to 2013 it is 44% down. In April 2015 to February 2016 it is 31% down. So see, it is not the markets, it is also the nature of the small cap that they fall aggressively. Now let's look at India's long-term growth. So the Nifty has surged 8.75% in 2024. Strong domestic demands and rising capex are attracting investors, and bank credit growth has slowed. This is the fact, but still maintains a double-digit growth on year-on-year growth. Indian companies have still the highest forecasted EPS growth in the Asia Pacific region. So the market future now depends on the global and domestic condition. Balancing optimism with caution is essential in the current market. So if you are investing, adopt a long-term perspective and avoid a overvalued stock. Remember, in the last 20 years, small cap index has crashed over 30% with 5 times. Market corrections are mostly a part of a market cycle. Rather than panicking, use them to your advantage. If you found this video to be informative, please like, share, and subscribe.